How are you?
I'm good. How are you? It's good to have you.
Good. Give us an update, Zach. Tell us what you're working on.
What am I working on? I'm working on too much at the moment. I don't know. I think we'll burn through our 30-minute panel. One thing I'm working on is trying to understand whether Bitcoin is, in fact, a risk-off asset. Because I've been investing in Bitcoin since 2011. And for me, it is very much a risk-on asset. It can be a safe haven, but one of the things I wanted to talk about was whether or not it really is a risk-on or risk-off asset. What are your thoughts on this?
I think from it depends on your timing. If you think about Amazon, let's just go there as a good analogy. Amazon came public in 1997. It was clearly not a risk-off asset for about 15 years until it got to like 2012 and started stabilizing. And so I feel like Bitcoin has been halted around the world because of U.S. regulation. And so the removal of the Biden administration and guys like Gensler are, I think, going to create more regulatory clarity and make it a risk-off asset. So not quite there yet. Again, going back to Amazon, Amazon went public in May of 1997, went down 50% 8 times in the first 15 years. And of course, in 2000, it went down 90%. And so we've seen these sort of swings in Bitcoin. But Bitcoin is this weird asset. As it scales, it becomes easier for large institutions to own it. So at 4, 5, 6 trillion, buying into Bitcoin, it's sort of an inverse thing. It's sort of a weird thing. The bigger it is, and just like Amazon, the bigger it is, the easier it is to own. So it's on its way to being a risk-off asset, but I don't think it's quite there yet.
Well, entertain me if you will, because I have a slightly different view of it. I think Bitcoin can be, I distinguish between a risk-on, risk-off asset and a safe haven asset. I think the term risk-off asset and safe haven asset are often conflated because often a risk-off asset is also a safe haven asset and vice versa. But I would say that the terms differ in the sense that risk-on versus risk-off is about sentiment. It's about market sentiment. When I see a risk-on versus risk-off environment, first thing I'm looking at to tell me which environment I'm in is going to be the VIX, volatility index. And which assets are appreciating when volatility is high are the traditional risk-off assets, the treasuries, gold. Safe haven assets, safe haven is a relative term. So for example, in Venezuela, or the first actually example of Bitcoin performing the function of a safe haven asset also correlated with one of the first significant appreciations of Bitcoin, which is in 2013 when we had the beginnings of the European sovereign debt crisis. We had challenges in Cyprus, and people who had their money in Cypriot banks and trying to figure out how to avoid this situation. There was, you remember the bail-in situation. Discovered Bitcoin. They stumbled upon Bitcoin, and back in 2013, nobody really knew about Bitcoin, but Bitcoin appreciated in that market, and we saw it perform that function of safe haven back in that period. So, would you take my view, or are you open at all to this argument that the differentiation between risk on versus risk off? Because I think history so far at least shows Bitcoin sometimes performing a safe haven function as a relative on a relative basis in turmoil, but not being actually a risk-off asset that has the typical kind of behavioral mechanics related to market sentiment.
So let me channel Michael Saylor for a second, because I've been spending a lot of time with Michael. He wrote the foreword for my new book, The Little Book of Bitcoin, and he took me through his balance sheet, and we've had a long conversation about what Bitcoin is. And so if you accept that Bitcoin is digital property, and if you accept that Bitcoin is programmable money, and you accept that Bitcoin could create an opportunity for the world to separate its money from the state, or at least a portion of it, There'll always be fiat currency. I'm not saying that it's going to zero or anything like that, but there could be a competitive race in the world to own Bitcoin on the balance sheet of countries. And now that the United States is open to this idea, I think it would be impossible to suggest that other countries are not going to do the same thing. And I'm sitting here today in December of 2024. I'll make a prediction here that by this time next year, the Chinese will be back in the Bitcoin game. They're probably going to add it to their reserve assets, and they're going to probably allow for people to mine it legally. I mean, it's ironic 10% of the mining is still happening in China, despite the fact that the Chinese Communist Party has disallowed it. But you're going to see this opening. It's almost like a match sailing race. You're not going to be in a position in the world in developing economies where the U.S. is moving towards Bitcoin and you're not moving towards Bitcoin. So I think what you're saying is correct, but I think we're probably 2 chapters behind in the book. That's probably like towards the end of the book, and if we're sitting here on stage a year from now and you ask me that question, I would say empirically it is exactly that, and here are the reasons why. Here are the countries that own Bitcoin now. Here are the corporations. I'll say this, and then I'd like to ask you a question, because somebody asked me this earlier. When will the first U.S. big companies start to hold Bitcoin on their balance sheets? And the answer to that is very simple. As soon as you get stable coin regulation and custody regulation related to Bitcoin. Now, the Biden administration did a disservice to the industry by vetoing SOB 121. But you will, in my prediction, over the next 2 years, you'll have the ability to hold Bitcoin at a major money center U.S. bank, and it will be compliant with the capital allocation, Basel III capital adjustments for money center banks around the world, which will give every bank that's tied to the Fed the opportunity to hold Bitcoin for its clients in custody. When that happens, it'll pave the way for corporations like Amazon and Microsoft, et cetera, to own it as well. So everything you're saying, I think, is happening. And I think the reason why you've been so good at your business is that you see these things before other people. But I guess the question I have is, when you look at it from your perspective and you live on this side of the world, in countries that are not tied to Europe or the United States or even China, but countries like Africa, other countries here in the Middle East, what's their view of Bitcoin versus the more developed world?
So I have to say I'm proud to be an American, but I'm also very proud to have been in the UAE building a business for 12, 13 years now. And very proud of what the UAE has achieved in the time, and to be able to have been part of that. I think that one of the areas that excites me, and that where the UAE has demonstrated leadership, has been in digital assets, in digital currencies, in recognition of crypto, in having the courage to do that. You've had sovereign wealth funds here holding Bitcoin directly on their balance sheet, mining Bitcoin for several years now. When the United States is really struggling to get its head out of the sand on this issue, regulation by enforcement has been the approach there, whereas here regulation has been done as a process, working with businesses, working with stakeholders to actually try to provide mechanisms for good actors to do good and to do business. I think 100% agree with everything that you're saying, and I'm very much proud to be in a country that has Bitcoin's. I don't think it's officially recognized as a reserve asset here, but it's well on a path to being so, and it is sitting on the balance sheet of sovereign wealth funds. So in some ways, it already kind of is a reserve asset by in that way. So this part of the world is definitely leading for developed, sophisticated country, with a dollar-based economy, and I think will maintain an edge over the United States and a lot of Western countries in supporting and promoting adoption, creating economies around digital assets, which is ultimately, some of the things you referred to, we do need other greater number of participants, corporates, participating in this story. So 100% agree with all of that. But I don't know. It is a very scary world to me when Bitcoin flips to being a risk-off asset in a relative term to the United States. And that's nothing against Bitcoin. I absolutely love Bitcoin, but something would have to be going very, very wrong in the world, in the United States, that Bitcoin suddenly has its correlation flip from being, again, risk on versus risk off, or performing well in a risk on environment. If you look at empirically of the performance of Bitcoin, there are a couple. Bitcoin does well in risk-on environments, right? It's 80% correlated to Nasdaq. It's negatively correlated to the VIX. When the VIX spikes, usually it's not going to be a good time for Bitcoin. Interestingly, if you look at the Bitcoin volatility indices, DVOL and BVOL, Bitcoin is also unusual in the sense that it actually its volatility can increase when its price is appreciating. Usually when you have assets, when their price appreciates, risk on or risk off assets, when their price appreciates, their volatility decreases. So these kind of characteristics to me are very much characteristics that Bitcoin is and will continue to be a risk on asset, but it has performed a great function as a relative safe haven. So another example of the point that I'm trying to make is, stocks are a risk-on asset, right? That's, plain and simple, stocks are a risk-on asset. But look at what was the best performing stock market in 2018 in the world, and even currency adjusted. That was the Caracas Stock Exchange. Now, was the economy booming in Caracas? No, it was the exact opposite. Venezuela's economy was collapsing. It was utterly collapsing. But stocks were a relative safe haven to bolivars, the domestic currency, so people wanted to get rid of their bolivars in any way that they could, and they bought what they could. So they bought into a risk-on asset because in that environment, it was a relative safe haven. So that's the argument that I'm kind of going towards. And if we're in an environment, or if we're in a future where the U.S. is in such a bad situation that Bitcoin flips and becomes a relative safe haven to the dollar, that just is a very scary world that I hope not to be in. For all of my other assets, because I certainly think we all benefit from environments where dollar remains stable and is a relative safe haven.
So let me just provide a perspective that and ask you to think about what I'm saying. Maybe you can react to it. So I hear what you're saying, but this asset, you have to look at it and say, is this an investment idea? If it's an investment idea, then it's a 1 to 2, possibly $3 trillion idea. But if it's an asset class, then it's a totally different category. It's a totally different story. And so CZ said yesterday that it's an asset class, and that because of its immutability, because you can't make any more of it, no meteor is going to land strike Earth with $1 trillion worth of gold. It has these properties, these technical, programmable properties that are irreplaceable for people. As a result of which, it should trade to at least where gold is. And since it's probably better than gold, and I'll make the case that it's better than gold, it'll trade over where gold is. And just think about this for a second. What is the impact of gold in the world at $18 trillion? It's a non-event. It's a very small speck on the backside of the global economy. At $18 trillion, Some people own it. Some people use it for manufacturing purposes and things like that. But it's a 1-ish to 2-ish% position, and it's literally a non-event. So just imagine if what CZ is saying, or Michael Saylor is saying, or what I'm saying ends up being true. Even at $30 trillion, Zach, this is a minor asset. It's not overly significant, and it won't disrupt the world. So if Bitcoin got to $1 million a coin, some have said, and I've talked to Mike Novogratz about this, Mike was like, wow, if Bitcoin's at $1 million a coin, it's really bad. That means the US dollar is completely broken down. And I said, well, just hold on a second. At $1 million a coin, it's only a $20 trillion asset, a result of which it can get there fairly quickly if a few things happen, a few dominoes have to fall. U.S. makes a decision related to custody clarity, big step. U.S. says, okay, we're going to buy 1 million coins over 5 years. That's the strategic Bitcoin reserve. The proclamation by Cynthia Lummis, big step. China, there's no way, and I'll bet money on this, that if the United States is moving towards a strategic Bitcoin reserve, that the Chinese are not going to participate. So to me, you could be sitting here with a $30 trillion Bitcoin, $1 to $3 million per token, and it not have that big of an effect on the global economy. Now, if you disagree, push back and tell me why, but I'm looking at it from this sort of macro meta perspective. It's just not big enough at those levels. It's 10 Microsofts.
I absolutely agree with you. But at $1 million, I expect that Bitcoin would remain relatively high volatility. Maybe it's not going to be a 50 vol, 100 vol asset, but again, stocks which are considered risk-on assets, Nasdaq, we're talking about implied vol in the long term in the teens. I think volatility in Bitcoin in the long term remains in the teens. To me, again, the risk-off asset, safe haven, a risk-off asset versus safe haven. A risk-off asset is the asset that you go to in a high volatility environment when you want low volatility. That is, to me, the difference between risk-on, risk-off. It's sentiment. And to be honest, I hope that Bitcoin remains a volatile asset, because I can tell you if Bitcoin goes to $1 million, you'd think, but the volatility goes down to treasury level volatility, or the volatility associated with other risk-off assets. Not going to be many people sitting at this conference, right? I mean, how many conferences are there? How many Bitcoin conferences are there? With this relative small size Bitcoin as an asset class versus conferences about treasuries. Not many people are signing up for whale passes to go talk about treasuries, even though it's a much bigger asset class. So it'll be a lot less fun if it ends up being for all of us, I think. And a lot of these businesses that benefit from the volatility of Bitcoin, crypto exchanges and so on and so forth, will probably, despite the fact that it's a larger asset class, the volume will kind of counter the volatility. So my hope is actually also that my thesis is correct and that it doesn't someday become this risk-off asset. But I actually agree with all the points you're saying. I mean, Bitcoin has this unique position. And by the way, I will say, Bitcoin in the crypto market is a relative safe haven, right? When altcoins go from being kind of overbought to oversold, Bitcoin performs that function because it's effectively ends up being like your digital gold in your digital ecosystem, and a relative risk-off asset compared to a lot of altcoins that can be quite volatile in these ultra high vol environments.
When you think of a risk-off asset, how much of your money, think like a portfolio manager for an endowment or for a large institution, and you have a risk-off asset in your portfolio, what's the percentage that you're going to put in that risk-off asset?
I mean, it depends on my distribution requirements. It depends on my liquidity requirements. It depends on the term. But let's say, typical endowment, in my treasury portfolio, my liquid, my ultra liquid, ultra low risk portfolio, we're looking at between 5 and 20%.
Okay. So here's the thing. Like I did this for my college. I went to go see the chief investment officer and asked those questions, and they have the portfolio of risk on assets, risk off assets. If you put 1%, in Bitcoin over the last 10 years, and you put 99% in cash. Okay, so you have 1%, and let's stipulate for the point of this conversation, even though cash can lose anywhere from 3 to 8% a year. It's actually a depreciating asset in this inflationary environment, but let's just stipulate that cash is a risk-off asset. 1% in Bitcoin, 99% in cash, it outperforms every mixture of everything. Stocks, bonds, alternatives, private equity, etc. I'm not saying it's necessarily going to do that in the future, but the reason I'm bringing this up is that you have to look at Bitcoin and make a decision about sizing. And so just quickly, when I was writing this book, The Little Book of Bitcoin, I asked Michael to write the foreword. He said, well, I'm happy to do it, but I got to read the book. Read the book, and he called me in the middle of August, and he said, hey, yeah, the book is great. I learned a lot of interesting stories about different people, your personal odyssey into Bitcoin, but I hated the last chapter. The last chapter was terrible. I said, really? I said, what was so bad about the last chapter? He says, well, you just told me that this is the best investment that you've seen in the 35 years that you've been on Wall Street, the 35 years you've been in investment management. I said, yes. Well, in the last chapter of this book, you're recommending a 2% allocation to people. And I said, yes, because I want to be conservative and blah, blah, blah. He said, well, that's a bunch of garbage. How much of your net worth is in Bitcoin? And so, Zach, at that time, it was 55% of my liquid net worth. But today, because of what happened over the last several months, it's closer to 80. But at that time, it was 55%. So he says to me, well, if you've got 55% of your net worth in this, you're recommending 2%. Let me ask you this. This is the best investment that you've seen in 35 years. Do you have 50 other investments like this? Or 49 other investments like this? And so, needless to say, I had to rip up the last chapter of the book, and I had to put all that in the book. But the point I'm making is whether it's a risk asset or not, if you believe that this is an asset class, and you believe that the world is now moving from a regulatory rubric towards accepting it as an asset class, then I would suggest that just about every single person in this room, and these are early adopters of Bitcoin, are underinvested in Bitcoin. Think about the people outside of this room, and I'll just say this, and I'll give you the last word. I went to my 35th year Goldman Sachs reunion, the start of our training class, and I was looking at 58 to 65-year-old people, and I said, okay, guys, raise your hand if you own Bitcoin. Not one person in the room raised their hand. Not one. I said, okay. I said, what about your kids? Any of your kids own Bitcoin? Maybe 5 of the 120 people raised their hand. So the people in this room are here. I would submit to them that they're underinvested in Bitcoin. But think of the people outside of this room. Think of where the possibility really is. I'll give you the last word.
Anthony, we're definitely on the same page, and again, I've held Bitcoin since 2011. I've tried to avoid selling it as the kind of denominator effect that you referred to in terms of how its position in your portfolio increases over time. I certainly also wouldn't recommend these nominal targets. Oh, well, you should only have 3%, which means that you're constantly having to sell your Bitcoin because it's constantly appreciating. I absolutely agree with the power that Bitcoin has, and I think that it is going into into another phase and another critical phase where it is getting a level of recognition from governments, from institutions, from corporates, from very, very deep-pocketed organizations that I think and entities that will have Bitcoin on their balance sheet, and some of them probably most of them are going to take the advice that you originally had in the book. Between 1% and 3%. I mean, as you know, people who actually manage these large amounts of institutional money tend to be more worried about getting fired, right? So they're usually playing not to lose, not playing to win. But eventually it becomes a point where you should, where people are going to say you're going to get fired for not having participated in this, not having having knocked it down from every IC meeting, having constantly ignored it as an asset, and that's probably a couple cycles away. So 100% agree with the power of Bitcoin, having it on the balance sheet. Its institutional level of adoption, its sovereign level of adoption. I think that is the future, and I think that we will benefit, those of us who have had it, continue to benefit from holding it on our balance sheets. I hope that it remains volatile, right? When the volatility decreases, the power, no matter how, if you had an asset, you mentioned this kind of treasury versus this cash versus Bitcoin mix. I mean, even if Bitcoin's volatility was 100% upside volatility, if it only ever went up, which obviously it doesn't, if it was the volatility of treasuries, if over that hold period it only had the annualized volatility the treasuries have, it wouldn't have had that impact, right? So and that's the, and when people are in a risk-on versus risk-off environment, when they're risk-off, they want to go to low volatility, right? They don't want to be looking at their screens and see it going up or down, by double-digit percentage points on a daily basis, or even anywhere besides very, very, very low single-digit percentage. And that's to me a characteristic that I think is actually a good characteristic of Bitcoin. It being a risk-on asset is what gives it the power to really transform wealth and appreciate so significantly.
Guys, thank you very much. It's great to be here. Thank you. Jack, thank you.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.